Thank you for your contribution, but it's not an expense, madam. Thank you for your contribution. Anybody else?
Okay.
Anybody else?
It's an asset, sir.
It's an asset. And to be specific, what type of asset? Current or non-current?
It's current.
Current asset. Okay, colleagues? Current assets have to be used up within a year. Okay? So your cash balance is always going to be going up and down. Okay? Bank. Is bank an asset?
Yes, it is.
Yes. What type of asset?
It's a current
Non-current.
Current asset. Current asset. Okay. Cash and bank are current assets. Okay, colleagues? Okay. So you have seen here, assets are here on the debit side. So on the trial balance, you're going to know where to put these. Okay? Once we've listed what type of accounts these are, on the trial balance is just now a walkthrough for you. You don't even need to sales. What type of account is it?
income.
Yes. Or revenue. Okay. So it's here under the credit side. Okay, income or revenue account, whichever suits you. Purchases.
How about expense?
That is correct. Expense. Return inwards.
Return inward is a contra revenue, contra income
That's correct.
account.
That's correct, madam. Yes. Contra revenue, meaning it reduces revenue. Okay. So which side should it be on this diagram of ours? Should it be under debit or credit side?
Debit.
Yes. Contra revenue comes here. Contra revenue. Okay. It reduces this, your revenue. Okay. Yes. Return outwards.
It's a contra expense.
Contra expense, yes. It reduces the expense. Okay. So where would it be? Debit or credit?
Credit side.
Credit credit side, yes. Expenses increase with debit, so it means they reduce with credit. Okay? Contra expense. Just remember, a contra, it just follows the opposite rules and it reduces. Discount received. Oh, before we go there, I hope we remember what return inwards and return outwards are. Do we all remember, colleagues? Can someone just remind the class what return inwards is and return outwards? Can someone remind us what return inwards and return outwards are? Oh, I haven't shared this document in the group. Ish. Oh, I've shared it, alright. Anybody, colleagues? Return inwards? Madam who said it's a contra revenue.
Hello?
Hello.
I'm and
You are
a custom.
breaking. You are breaking,
Hello?
unfortunately. I can get, yes, I can get you now. Mm-hmm.
Let me try.
Uh-huh.
Yeah, so return inwards is, for example, if you're running a business and then a customer returns something like what they bought,
Mm-hmm.
and then you need to give back the money
Yes.
to the customer.
Yes. Colleagues, I hope we've got that. Okay. I hope we've got that. That is return inwards. Customer brings back goods. Okay, so you made a sale to the customer. Maybe let's say you sold goods for 2,000 kwacha. You sold to somebody goods worth 2,000 kwacha. And the person says, goods worth 300 kwacha are bad. So he returns these goods worth 300 kwacha. So it means this 2,000 revenue that you made reduces to 1,700. So this is the return inwards, the contra revenue. Then what about return outwards?
I think these are goods that are returned to the supplier. You as a buyer, you buy goods to the supplier and then you change your mind and return them back to the supplier.
Okay, not changing your mind because they'll refuse for you. Unless maybe they say the goods are damaged, expired, the wrong type of goods. Yes. So, using the same example, you bought goods from your supplier worth 2,000 kwacha. This is your purchases expense. And you find goods worth 300 kwacha are bad, so you return them to your supplier. So this 2,000 kwacha expense reduces to 1,700. Okay, that is return outwards. Okay. Discount received.
Discount received is an income.
Yes, considered as an income. Okay. Can you explain what it is so that for our colleagues, the others to?
Okay, let me try. For example, you are buying goods from your supplier, and then if instead of paying 2,000, then your supplier gives you at 1,500 kwacha. Yeah, I don't know. Then it means that you're getting a discount of 500 kwacha. So that's an income to your business. The 500 kwacha.
Yes, where you're supposed to pay your supplier maybe 1,500 kwacha, then he's giving you a discount of 500 kwacha. So you're only paying 1,000. So the 500 kwacha you have saved, that's a saving. So that saving can be treated as income, okay? Also, discount received can also be looked at also as a contra expense, okay? Because that discount has lowered your purchases expense, okay? So there are two ways you can look at it. That's why in the trading account, hear this clearly. That's why in the trading account, if you want, you can subtract discount received from purchases. That's why you're treating it as a contra expense. Or if you want to treat it as income, after you get your gross profit, okay, then you said add other income, then you can put discount received there. Okay, so discount received can be looked as income as a form of saving for you, or it can also be looked at as a contra expense because it's reducing your purchases expense. So where is it going, colleagues? Debit or credit side?
Credit side.
Yes. Discount allowed?
Discount allowed is an expense.
That's correct. An expense. Okay. Can you explain what happens when discount allowed is given?
So for instance, I'm selling a product at 300 kwacha. Then I decide to give it to a customer at 200 kwacha. That 100 kwacha, I'll treat it as an expense to the business.
Yes. And it can also be looked at as a contra revenue also. Okay, because that 100 kwacha has dropped your revenue. You are supposed to receive 300, but your revenue has dropped to 200. Okay, so it can be looked at as an expense or a contra revenue. Okay. Yes. So where is it going?
It's going to be on the debit side.
Yes. Okay, carriage inwards. courage inwards?
It's the cost of bringing in goods.
That's correct, sir. Thank you very much. Delivery expense. Okay. What is carriage inwards? Okay. The expense you incur when bringing in goods. Okay. And carriage outwards? If
That's
carriage inwards is the okay,
carriage inwards. I mean outwards. You're saying something?
Yeah, I thought you were about to answer, that's why I paused.
Oh, carriage outwards is the selling and distribution expense.
Those selling and distribution, especially the distribution expenses.
Yes. Which is a debit.
Yes. Allowance for irrecoverable debts.
Expense.
Almost close. If it was just irrecoverable debts.
It's a contra asset.
Contra asset. Madam, you've been paying attention, huh? Yes, contra asset. Okay. Yes, madam.
And
explain
I
why
just
it's a
wanted to
contra
ask.
asset.
Sorry?
I was just saying, explain why it's a contra asset.
It's a contra asset because in business, when we make, let's say when you're running a business on credit basis, we need to create an allowance for recoverable debts, meaning that we might not recover all of our monies.
That's correct. Yes.
Yeah,
Must
so the
make a
monies that we
provision.
recover,
Mhm.
it reduces the asset. It reduces our assets. That's why it's a contra asset.
Yes. The asset it reduces is which one?
Hello?
Yes. I'm just asking, which asset is it reducing?
It's reducing our current assets.
Trade receivables, madam. Okay. Trade receivables. Okay.
Oh yeah. Oh.
Yes, the people who owe us money. Yes. So this is a provision that you might not get all your money back. Okay. This follows the prudence concept. Okay, where in accounts you have to foresee any expenses that you might incur. Okay. Any income that you might generate. Yes, falls under that. So as a business, you know that if you're doing credit sales, you won't always get your money, all of your money back. Some might not come. That's why they make this provision. Okay, so it's a contra asset. So where is it going?
It's going on the credit side.
Yes, credit side, yes. Assets increase with debit, so it's going on the credit side. Okay. Remember, all these accounts here increase with debit here. This is increase with debit. So when we're doing journal entries there, whenever we saw any of these accounts, we are debiting them. And in the trial balance is seeing also down the debit side. Okay. Accounts receivable.
Accounts receivable, that's an asset, so you debit.
Yes. Current asset, right?
Yes, sir.
These are the people who are owing us money, right?
Mm.
Yes. The allowance is the contra asset for this one. Okay, it reduces accounts receivable. Okay. Accounts payable.
This one is a liability now.
That's correct. Current or non-current?
This one is a non-current.
Current liability, sir. Current
Okay.
liability. Yes, colleagues, I'm appreciating this. Where everyone is participating, this is what I'm enjoying. Okay? This is how our classes should be. All right. Inventory.
That one is an asset.
Yes. Current or non-current?
Non-current.
Current. Current. Okay, your inventory has to be used up within a year. Okay.
Mm. That's a
Only if
current.
you are a business like, let's say, this business that sell cars, where you find your inventory can sit for 2 years, 3 years, it hasn't moved. Okay, these, yes, rent, wages, self-explanatory. These are expenses. Okay. Capital. What is the definition of capital in accounts?
It's the money you invest in a business in order for you to produce to gain a profit.
Yes, sir. Yes, money and resources invested in a business. Okay.
Mm.
Yes, if you put in money, you put in motor vehicles, you put in computers. Okay. You put in your house. Okay. That is yeah, capital. Okay, and capital increases with credit. So, colleagues, now you are ready to make the trial balance. Okay. Just follow what we've said here. Okay, don't try to make your own rules anyway. Okay, just try to follow this. And you look at this diagram here, and you see where to put your account.